Market news now. Shares in Japan jumped after Prime Minister Yoshihide Suga said that he will not be running in the upcoming leadership election. The Nikkei closed 2% higher. Elsewhere, mainland Chinese stocks closed lower. What we did see, though, was the Caixin PMI data that came in at 46.7 against July's reading of 54.9. Earlier this week, the official non-manufacturing PMI for August showed contraction in the sector for the first time since early 2020. And as a result, looking at the Hong Kong Hang Seng Index shedding 0.7%. European markets mixed at this point as investors monitor key economic data out of the Eurozone and the US. And in the US, of course, we are awaiting the non-farm payrolls data. And we'll be talking about that with our market analyst, Warwick Lucas from Galileo Capital. Warwick, thank you so much for your time. Let's talk about the JSE. I mean, how are we faring right now? Looking at around 9:30 this morning, we were a little bit lower, in line with our peers.
Right, so we are generally seeing a much stronger commodity sector. It's a bit of a red day across the board, as viewers will see from your screen. But generally, our miners putting in the best showing and losing the least ground. Part of that, I think, relates to the strength in the rand, which might seem like a bit of a strange thing, but of course, when the rand gets stronger, these miners tend to be a little less profitable. So it sort of works the opposite way around, so to speak.
Right. So yesterday, after market close, we had Truworths releasing their financials. What did you make of the retailers' numbers?
Okay, so I think a pretty short and sharp description there would be things like turnover, and the top line was pretty much unchanged. But I think what was important there was that the 480 cents a share that they came out with did beat market expectations of 460 cents. But of course, it was a very, very big bounce, well over double, which goes to show that these forecasts can be quite decent as long as the company gives good guidance to the market. And what's particularly important there was how there was a decline in bad debt provision. And I think that's a theme that we see across the board, and we saw it in the bank results as well. How the recovery in the economy is giving a bit more confidence back to companies and giving them some confidence in the credit cycle as well, and lending out to consumers.
We can kind of officially say that results season in South Africa is in full swing, because a lot of these our JSE-listed companies are publishing their figures. What do you make of SA results season so far? I mean, is it meeting your own expectations?
Okay, so it's generally a big recovery that we're seeing across the board. So if I look, for example, at just a quick spread of numbers, Cashbuild, huge recovery. Wilson Bailey, big recovery. Santam, big recovery. Impala, big recovery in earnings. We saw Aspen come out. With them, it's just a nice improvement. And of course, they weren't smashed before by COVID. They were smack in the middle of COVID and providing services that people needed. So, of course, they had a high base, whereas, of course, everyone else tended to be hammered by lockdowns, lack of volume, lack of confidence, and then so on and so forth. So it's basically the recovery that's coming off that incredibly low base that was set as a result of both COVID and the lockdowns. And I mean, it's a big wave. It hopefully will act as a kind of a flywheel that'll keep the economy going and help propel some kind of recovery in employment data and so on.
Right, so later today we're expecting the non-farm payroll figure. What happens when it's a little bit disappointing? Okay,
so that can be a double-edged question, because disappointing can mean a couple of things. First of all, it can mean disappointing in that there's low growth and people struggle to get jobs. I think that's what you and I and generally the lay public would say is a disappointing number. But you can also get a number that's too high and creates a concern that the economy is overheating and that inflation could be on the way and the Fed will taper and so on and so forth. Right now, that consensus number that is being looked for in non-farm payrolls is growth in U.S. employment of about 750,000 jobs. And I think it's going to be an interesting one to watch. Too high and the market won't like it. Too low and the market will be concerned about growth. So hopefully there's a good quality communication drilling into exactly what drove those numbers. But I think it's important to bear in mind that it is summer season numbers that come out. There's a lot of seasonality in there.
Right. Warwick, thank you so much for your time. That is Warwick Lucas talking to us about the trading day so far and also throwing forward to the expectations around the non-farm payrolls data, what it will mean when it comes in too hot and what it will also mean when it is a little bit disappointing. And of course, those are figures and themes we'll be keeping an eye on for you going into the trading week next week.